computer. Hello, this is Dave, and welcome to Equity Story, and a wonderful day. And this is just general share advice and not personal advice. Wolfie, how are you doing, champion?
Not bad, thank you very much. Tuesday, which is, look, I had a great day yesterday, that's for sure. Can we keep going with it? That's the question. And you know, the markets last night were nearly weak in America, but it wasn't too bad actually, because some stories that usually are the flag bearers for us were okay, like Atlassian, Rio and BHP went up and so on. So not bad.
All right, Wolf, let's talk about some stories which I think are interesting. Now, we've seen gold have a little bit of a shakedown recently.
Mm-hmm.
You know, it did bounce up a little bit overnight, so maybe it's a little bit of life in the possibly a little bit of a life, or maybe it's just range trading. Hopefully it'll come back a little bit.
Mm-hmm.
There's a very interesting little gold play, MEK, which is Mika Gold.
Yeah.
And Wolf, they came out today with some absolutely superb drill results. And if you could just bear with me, I'll try and bring these across so you can sort of have a look at them. Now, everything a lot to like about it, Wolf. Shallow, consistent, and not bad. 4.81. There you go. 4.81 at GT, and you got 2.20.
Yep. Pretty
good grades.
Look, impressive. And let's just remind people, Mika is the old LCD that we did so well with, right? Latitude. So we went into this story for the high grades, used to be doré minerals that they had the project in that region, but they've changed the focus to Turnberry. And, you know, we thought, why are they going there? But I think I can see why they're going there is because they're coming up with some interesting results, and they're going to add certainly some more ounces to that 600,000 at 1.7 grams per ton. So what is the interesting thing? And I talked about it last week while you were there, Dave. I think this is such an undervalued gold story at 50 million market cap, that if they can get to that 1 million ounce mark, it will really put them into the category where a lot of investors will be interested, because then, you know, it sort of crosses that threshold of 1 million ounces, probably then can get to a 100,000 ounces per annum production, and the ball keeps rolling from there. So from the results today, like you said, you know, three things we look at: grades, width, shallowness. All three things are fairly there. You know, it's not a ball terror, you know, it's not 50 grams per ton, but I love the consistency here, right? And potentially they could keep coming up with that. And this is what could make this a very nice little project. So I'm liking this. Bottom of the draw, 50 million market cap. If they can, in 1 or 2 years' time, if they can add those ounces, have that around that 1.7 to 2 grams per ton of gold, I think you're going to see a much higher market cap company, Dave.
Well, Wolf, you've got to be impressed. 50 million market cap. And I've seen many sort of other gold plays with less tonnage, not as exciting hits, be valued a lot more. So,
yep,
very, very interesting. Like you said, possibly a bottom of the draw gold player.
Yeah, and you know they said it right there. And I think 1, 2, 3, 4, sixth line saying St. Anne's, this is what the drilling has come up with, is yet to be included in the current mineral resource. So this is obviously drilling that it's outside the mineral envelope. They're talking about a strike length of about 1 kilometer within the 7 kilometer gold shear system, which hosts Turnberry. So very, very well endowed gold system by the looks of things. You'd definitely be probably, if you've got the long-term view, you're buying, you know, we talked about Alkane yesterday. Today's Mika's turn. So I think two gold stories that are worthy of consideration.
Well, thank you very much for that. Now, another story that seems really interesting, and one we haven't really followed, and it's actually held up reasonably well in a difficult, is VRS. And we need to look at it a little bit more, Wolf, because the market cap is what, 30 million, and you've got revenues at around 92 million.
Yeah, I know. So it's obviously been flying under the radar, not just for us, but probably for everyone out there. So we need to have a little bit more deeper look through to see exactly what makes this tick, the business model, and anything else that we can maybe find that reasons why people haven't invested in it, or maybe why they're missing out on it. So I will have a look at it. They've got a strong cash balance by the looks of it at 18.2 million as well. It looks like they've changed management over the last 2 years, and they've started to grow again. So this could be the time, Dave. This could be the one that maybe we can have to have a look at and say, hang on a second, market's missing out.
I mean, they come from sort of obviously they've been sold off pretty strongly over the last few years, but possibly a bit of a turnaround story here.
Yeah, exactly. And you know what? We always talk about the turnaround stories. It sometimes takes time, takes a year or two before it sort of bottoms and starts going up on new management. You can see the numbers, and this is what probably the market, will probably be able to get warm to, is the numbers. And from 75 million to 77, now 92 million in unaudited revenues for FY22. And it's also looking like they're saying to deliver a small net profit, which they haven't seen probably for a number of years, right? So something we need to have a look at.
All right, Wolf, you're going to have a deep dive into this story this week, and maybe we'll have a look at it on Thursday?
Yeah, something like that.
Okay, excellent. JB Hi-Fi.
Yes.
It's done it again, Wolf. I mean, the company gets knocked on the head. It's like Rocky, isn't it? It gets beaten up and it comes back and it's still fighting and it's still performing, it's still delivering, and what a fantastic dividend player. I
have nothing but admiration for the management, right? It's like you said, it's like that song, the Chumbawamba, when get knocked down and we'll get up again. Yeah. That's that song. They keep delivering. It doesn't matter what market we're in, right? Whether it's bad for retail, whether it's bad for economy, whether it's great for economy. They just seem to come up with some sort of good feel about the actual results somewhere along the line. And, in a very tough, really market, when you see some of the other retailers getting absolutely hammered, they still delivered a good growth across all regions. So pretty good. Pretty good.
Well, also, this financial year coming is most probably could potentially be the first financial year for a while they've had freedom with their shops being open as normal.
Oh, that's right. That's right. And and this company has also had a lot of detractors from it. So it's got probably a lot of shorting, and we've seen the shorting on this previously. So it's not going to be easy to ride it further, but as a dividend company, and I know we got out of it because it's just looked so sick maybe about 5-6 weeks ago, that we thought, is there something wrong? We had to obviously follow, was there something wrong with this company when it at a free fall? But it's delivered, and again, I think the company's saying no, everything's okay. We're actually doing quite well. So let's have a look at the numbers themselves, and I'm just going to put it into Reuters just to see what the numbers are. It's trading on 9.9 times. So really, the shorters just can't really pick on it anymore, because it used to trade on 25 times, right? They can't do it anymore because it's trading so cheaply, and they've got a 9% dividend yield. So really, maybe, Dave, maybe you can go, okay, well, if I take a fairly wide moat around this, so say 55 and 35 as the bottom and the top, and if it trades in that sort of range in the 40s, I'm happy. I'm happy with the dividends.
And you'd be happy to buy this back on that result?
Yeah, I think so. I think you'd go, nothing's wrong.
All right. Okay. So JB Hi-Fi.
I might add this onto the dividend portfolio.
All right. Okay. Thank you very much for that, Wolf. So there you go. A nice little potentially a dividend play if people are looking at. And what is their dividend, Wolf, exactly now on those numbers?
Full, totally grossed up, it's 9.44%.
Wow, that's impressive, isn't it?
Yeah, it is. I mean, you can't say no, can you?
Wolf, moving to another dividend play, BHP, which is around 14-15%. Today's announcement encourages you to hold that as a dividend play, or?
Yeah, look, again, I'm taking the long-term view. I'm taking that really wide moat, because we're not here with the BHP really for the growth anymore. This is for dividends, right? So even if you cut the dividends in half, you're still getting a pretty good dividend. The only time I would probably sell this is if it really collapses, right? Which I don't think it will. So yeah, look, I am going that. I think we talked about it last week again. If you take that really wide moat between the 32, I think, to $50, I think we're good.
All right. Now, PDN, Paladin, talking about potentially become a producer again in 2024.
Yep.
I mean, technically, it's below the trend line. There's risk in the stock. We're not there. Now, if this jumps back over 71, starts to trend, more interested in this sort of story, Wolf?
Yeah, look, it's added an extra level of excitement being a producer, right? But I do remember Paladin when he became a producer during the previous boom, uranium boom. It didn't get, it did get the excitement at the beginning, but people realized that it still can't make money in that market that we had previous boom. And I think it's the same thing will happen this time around, Dave. So I think it's more about still, while they've added that production profile to the thing, which is probably going to make it top of the uranium tree for us here in Australia, it's still going to be all about, is it going to be profitable and where's the uranium price going?
And Wolf, we talked about this earlier, but just to explain to all the mums and dads out there, the problem with uranium, there's the old historical producers that are churning this uranium out for basically very, very cheap, low prices.
Yep, they are. And the Kazakhstans and the Canadians have been around the game for many, 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 many years, right? So any upstarts is always going to be difficult. And they've got scale. They've got many mines, massive operations, and their costs are going to be probably cheaper than anyone else out there. So it's always an uphill battle for anyone to come up with an unbelievable deposit where the costs can actually rival those Kazakhstan cheap labor, right, that they've got over there. So yeah, it is, and the market's actually quite small. It's actually not a big market at all for uranium. So when you got dominated between maybe 3 or 4 producers out there, yeah, they can pretty much manipulate everything, and you really have to have an established rapport with your suppliers and your, the utilities for you to actually probably turn a profit. And we even seen the Canadians like Cameco shut down some of their mines because they weren't profitable, and they can just reopen it whenever they need to, when the prices go up, and they flood the market again with uranium. So it's very difficult.
Wolf, you know what's interesting? We put this on. This had a breakout.
Yep.
At 20 cents. It's up 400% since, right? It goes below the trend line. You've obviously got to get out of it. But you know what, Wolfie? It's up 400%. It's all on fluff, isn't it?
Well, I think it's all on that's going to become a kind of producer again, right? That's what you've got.
But like you said, even if they do become a producer, I mean,
yes, it doesn't guarantee success, does it? I mean, that's the thing. No, it doesn't. It doesn't. That's why, I think it's probably already priced in. Unless they can show they can make a profit, then maybe we'll have another leg up. But the market's already realized they're going to be a producer. That's why it's probably gone up 400%. While it adds that, extra tick to the box, that's going to be, top performer like maybe BOE, where it's going to be a producer as well in the next 12 months odd. Yeah, can they make, that's the next question. Can they make a profit? And if they can't, it's going to happen. What happened to the previous boom? They're going to struggle. They're going to lose cash, right? They're going to lose cash. They're going to burn through cash. They're going to burn through the production, and it's deja vu.
Harmony, Wolf. It's going to obviously looking to be profitable. It's up 27%. But really, when you look at the charts, it's still an absolute waste of time. You wouldn't really be having a look at it. I mean, the danger here, Wolf, is yes, it's great to see obviously Harmony starting to be profitable and good to see it turning a corner, but really we're about to go into a really tough world for the next 2 or 3 years. These businesses and this one is 100% money lending, doing the sort of yeah, I don't know. I think there's better things to play with, aren't there?
Absolutely. I 100% agree. I mean, I think while the news today was pretty good, that's why it's jumped almost 30% today. And key for me, and you can see, take it across the board, if you get a company in a tech space that has been unprofitable, and all of a sudden it says, guys, cash flow positive, we're turning profitable, you could see such jumps in your story. However, with Harm, it is an added level of risk because they are in the industry where really the interest rate rises are not very good for them.
Yes, so just stay away from it at the moment.
Just stay away from the whole sector for the moment, I think.
Yeah, don't get too sort of caught up in those sort of moves.
Yeah.
Wolf, ALD. They're saying here their margins. Hang on, what we got here? The Linton refiner margin for the second quarter reached the unprecedented level of US $32 per barrel,
Yep.
much higher than the original sort of $10.59 per barrel US.
Mm-hmm.
They've got some good margins coming in at the moment, ALD.
They do. I mean, it's almost like it's the coal play of the oil plays, isn't it? I mean, they're going quite well. They're going really strong margins. Can you get any better than this? Maybe, right? If we have more of a problem in Europe and so on. So look, it's going great at the moment. So I think if you're in this, you're still probably technically in it. Yeah, and see where it goes from here. I mean, looking at the numbers, 13, 14 times, 4% yield. It's actually not bad at all. It's trending. It's one of the very few that's actually going quite well.
Definitely, and I think the way it's looking, Wolf, maybe just have a little bit sideways on that exhaustive pattern.
Yep.
Buy signal, bullish signal. I think again it'll be another trend.
Yes.
Hub. So congratulations to the company, Wolf. More funds under management. You've got to take your hat off to them in what is not an easy environment, but not good enough for the market, and not enough, and hits the trend line, and back down she goes again, and actually very, very weak price action technically.
Yeah, I think look, this is the problem with not just Hub but Net Wealth and PPS, is they had such a tremendous run over the last 2 years that it's elevated all the fundamentals of the company. So these guys are trending on 160 times PE, right? While they can probably drop that down significantly, maybe over the next year or two, with doubling and tripling of profits, it's still very, very high PE. So I think there's a little bit of, from the investor type of thinking, well, it's just too expensive in this market. Yeah, I don't want to push it. So if there's any opportunity for a profit to be taken, they're taking it.
Wolf, in value, how would something like this Hub compare to your other your more preferred PPS story?
Look, I think, to be honest, I actually prefer. Well, PPS is definitely one of the small ones, so I like that one as a play. But out of the two big ones, I prefer the Net Wealth story to the Hub story, to be honest. But Net Wealth is in the same position, although it's cheaper at 58 times compared to 160 times. So, they're both expensive. That's why they're just having a little bit of trouble of getting anywhere back to these highs, because it's just impossible at these sort of levels of PEs that they've got.
Let's have a look at the Net Wealth. But I mean, they're both holding up really well, aren't they, on the charts?
They are, because they're still delivering, right?
Yeah.
They're still delivering the numbers. It's the fact that the only thing that's holding them is those elevated PE levels.
Thank you very much for that, Wolf. QBE, Wolfie, the chart's just looking sideways and just can't go on with it, can it? Just find that, it was actually having a nice little march up here, and just found that $13 a little bit too soon.
Yep.
And since then, really, pretty naff share price performance.
It is. Look, I am going to give it the benefit of the doubt at the moment. I didn't like what they've come up with today, of course, because there's a bit more gremlins in the closet. But if I read through the previous announcements, and I did last month, they were poised to do much better than they did previously, because they actually should do much better in a rising interest rate environment than at zero interest rates, because they control about, I think, what is $30 billion of cash and cash type in assets. So, can you imagine that sort of money? If you can, have, instead of having 1% term deposits, having 2%, they can double just put it in the bank. But you can see that there's potential there. Can they unlock this potential in this rising interest? And this is my sort of question for it. So jury's still out for me on QB. It should do well in this environment. It just hasn't done enough yet. So yeah, look, I'm watching it closely. I still got hopes for 2023, but they need to show me more.
Right. Next one off the list is AV1, which is one of our sort of high risk sort of small cap plays, Wolf. What did you make from their quarterly announcement today?
Top line growth, nice, right? So 2.5 million now. Look, I'm hoping they're going to get to 5+, at least by 2023, right? They have to. I mean, we talked about with the management about getting up to 10-50 million bucks and so on. I mean, they're quite big numbers, so they'll need to motor on. They obviously grew quite nicely, but they're coming off a small base. So I'm expecting at least doubling that. So at least 5 million next year. The troublesome for me is it's in a tier 3 because it's still unprofitable, still cash flow negative, which is actually quite significant, Dave. I think if you look at the annualized, they're looking at about 10 million in negative cash flows. They've only got 5 million on the cash position, that's inclusive of the 3 million in debt. If at that rate, they'll have to raise again within 6 months, no doubt, which is not great because they're going to dilute more.
I think a lot depends on really their relationship with Google, how quickly they can
ramp it up. Yep,
they can ramp it up, and so.
And also, Dave, can they cut some costs somewhere? Maybe that's also a question, the management.
It's hard, isn't it, when you've got a big sales staff like that and you're trying
exactly, and this is what they depend on, isn't it? The sales. So
yeah.
It's a catch-22, but there's got to be something because they have to go back to the market.
Yeah, definitely. So, okay, what's your take on AV1 though? I mean,
look, we're out as a trade right at the moment because it dropped under the 10 cents. We had to go out and so on. So if you're not in it, you just got to wait. We're going to wait probably for another 12 months by the looks of things, right? Until markets improve, until we see lower cash flow outflows. That's what I'd be putting it right now. And look, I'm still a believer in the story where over time, if it gets to that 5 million, then 10 million and so on, it could be a pretty good story.
Yeah, definitely. I think it would be a fantastic
and
story.
advertised, right? So very, very important.
All right, Wolf, you had a little bit of a freeze there, but you're back. Good.
Oh.
I
was talking to myself then, was I?
Yeah, you were, but I'm sure you had a nice chat with yourself. That's fine.
I normally do.
You love talking to yourself. You love looking at yourself in the mirror.
Yeah. So well, at the moment, I think the summary is at the moment, if you're not in it, there's definitely no rush into this. We've got to wait.
Wolf, GDG, obviously another fund under management. I think below the trend line. Again, doing reasonably well, but I think we'll stay away for the time being.
Yep, correct.
CYG, likewise, pretty solid performance. We looked at the results, but really not quite ready for us just yet at the moment. It's below the trend line, looking sideways at best. Yep. And ALK, so they came up with a quarterly. Did you see anything in their quarterly, Wolf, that you hadn't seen before?
No, I think it's just a reiteration of what we've seen over the last couple of quarters, right? Telling us the achievements that they've made. I'm still liking that Boda Kaiser project. It should be huge. Production profile is very nice. Dave, AIAC of 1,150, I think, somewhere around there, which is better than some of the bigger players out there, like Evolutions and so on. I mean, you've got to give them credit. They're doing very, very well. So, like I said, I've got two favorite gold stocks right now, Alkane and Mika.
Lastly, but not least, Wolf, we put ALC as a hot stock this week.
Yep.
Reason being, obviously, fundamentally, it looks very cheap. The company's never really always delivered.
Yep.
And we're starting to see a little bit of life on the daily. So maybe that's a sign. At least we can get back up to 16 or maybe even 18 cents.
Yep.
Wolf, you're happy that this stock was obviously, this was a hot stock because basically you've spoken to us about it, you like it, and it's been selected on your ability, really, Wolf, to pick up really good stories fundamentally, and decided it's a little bit of oversold. Could you maybe just talk a little bit more about this one? Why fundamentally you find it interesting? I know, so when you look at the revenue and the valuation, it's looking obviously very, very, well, it's scary in this market. Anything's very, very cheap, but
better than before.
Yeah, it's certainly looking at value there, and it's a little bit like the little cousin of Promedicus, isn't it? Could it?
Yeah, it is. In a way, it is, and I think it's a story. It's quite attractive, right? It's solving a big problem out there in a hospital system, and that is unfortunate deaths through not negligence, but just having a lack of maybe systems in place, data checks in place, and so on. So this solves that problem, right? Where things are much more organized, maybe digitized, and so on. So there's less human error, which leads to a lot of issues at hospitals and medical centers.
And Wolf, you think also with the hospitals absolutely sort of short of staff at the moment, packed to the brim.
Under pressure, under
yeah,
stress, right? All these things.
yeah. You think they'd be getting a lot more contracts, a lot more work?
You think so? And they are, right? I mean, they are
Yeah.
winning contracts here. They're expanding their existing contracts. So that's why we like this story. I think overall, a very interesting long-term play on the healthcare space, where I think there's a greater need for having those less issues at hospitals when there are, maybe stresses about, not even stresses, just in general speaking. I mean, when we saw the statistics, I think the second biggest cause of deaths in the hospitals is actually human error.
Oh my God, that is terrifying, isn't it?
I know, which is really scary as just thinking about it. So yeah, look, I like it. And when I saw you put it on the hot stock, I think we talked about it as a possible little bounce, right? That we've seen some of the other tech stocks, and this is poised to do so. And I told you right at the beginning, I thought they're going to come up with a quarterly, but they might, because I'm looking at they actually had a previous quarterly in April, so maybe they will come up with a quarterly at the end of this month. And the last time they had one was last week of April, which probably means next week sometime, an update.
On that note, Wolfie, thank you very, very much, and have a wonderful rest of the day.
Okay, cheers, guys. And actually, see you tonight. Very important. Don't forget, Dave, unless you're going to come up with another poor excuse of I'm sick.
I'll tell you what, I'm still not quite here. I am negative on my test, but like sometimes you feel your body's there, but your spirit is flying over here somewhere.
Look, I thought that in Wolverhampton they're pretty tough, but I have to change my mind.
No, I'm not tough, Wolf. I'm definitely not tough. Sorry. All right. Thanks, Wolfie. See you, mate.
Oh, cheers. Bye.
Bye.